Hi guys, welcome to Tabaruk. I'm Fahad and this is Moin, and we're two mates and investors, and we are the best halal and ethical investors in Australia.
So at Tabaruk, we teach others how to grow wealth. We talk about the Australian share market, the ASX. We share our life portfolio, the companies that we invest in. We talk about the in-depth analysis on those companies. We write step-by-step guides, articles, and videos. So today we're looking at whether investing with $500 or $5,000 is the same or different, and also how we beat short-term trading and lazy index funds every time. Okay, finance guy. Is investing with $500 the same or different to $5,000?
Okay, the actual thing is the approach. You want to see your money grow. That's why you're investing. So whether you're investing with 500 or 5,000, the approach should be the same. So the approach is to buy shares in quality businesses so that the end result is your money is growing. So it is 500 or 5,000, whatever the investment size, big or small, I treat it like I'm buying a house.
So you don't approach buying a house and think, this doesn't feel right.
No.
I want to sell it now. I've changed my mind.
So if people were to adapt that mindset to investments, you'll be surprised with how successful many people would be.
So before you buy a house, you research what suburb you want to live in. You research what type of house it is, how big, rooms, bedrooms, garage, what direction it's facing. You look at how far the schools are. You look at how far public transport is.
Yes.
So much research.
Exactly. And at Tabaruk, we research every company like it's a house. Is it going to be there for the long term?
We also research things like how much the company owes, what the company's debt position is, what their cash flow is like, profit, loss, how much money is coming in, how much money is going out. Is the money being put back into the business to grow when it's needed? What's the management of the company like?
Very important for us, that part.
Are they leaving? Has there been a change of management?
Exactly.
Are they hiring more employees as they grow? How do they treat their employees?
You have to look at those things.
I'm on LinkedIn looking at the company's employees and also trying to see what's happening, what jobs are being advertised, if that company is looking to hire.
There you go.
So this approach of researching companies in depth, whether we're putting in $500 or $5,000, because it's for long-term growth, always beats short-term trading and index funds.
It's because you're planning for the future.
That's right. So now let's look at the 3 reasons that we've mentioned in one of our articles. It will be in our description. Why specifically we beat short-term trading and index funds.
All right. So the first reason is compounding. Second reason, less fees and taxes. And third, this one, bro, history. Because the past prepares you and gives you clues to the future. I'm not saying you can predict it, but it shows you how people reacted and it shows you what happened after the reaction.
That's right. So let's look at the first reason, compounding. Now, you may have heard of the terms compound interest or compounding in other ways, but the simplest way we explain compounding is exponential growth versus linear growth.
Yes.
And this is possible when you allow your investment, whether 500 or 5,000, to have time to grow exponentially, to compound in the market.
So it's like, so what you're saying is time in the market, not timing the market.
You can never time the market.
Over 15 years, we've done a minimum of 15% returns year on year. Some years we've killed it, but this year, actually, I think we're going to smash it. It's going to set us up for the next 4 to 10 years, bro.
Let's talk about the second reason why we beat short-term trading and index funds.
Fees. Short-term trading is when you try to buy shares and sell them within a day, a week, or a month, hoping to make a profit.
That's right. Now, every transaction, when you buy or sell shares, has fees, also known as brokerage or transaction fees. In Australia, this typically varies between $10 to $20 more if you're investing with larger amounts.
Yeah.
Let's take the cheapest that we know of. It's around the $10 mark.
Yeah.
Now, long term, you might buy and sell shares on you a few times. Let's say over 7 years, you did it 10 times. That's 10 times 10, $100.
Yes.
That's your fees for 7 years as a long-term trader.
So that's including the buy and the sell because each of them is $10.
Correct. You might have bought a few times, you might have sold a few times.
Yes.
Now let's look at short-term. On one end of the spectrum, you have day traders. They buy and sell multiple times a day. And then on the other end, you might have people who do it over a week,
Mm-hmm.
watching the market swing, or they might do it less frequently. Let's take something in the middle. Someone trading multiple times a week. Even multiple times a week over 7 years is going to end up being about 1,000 transactions. That's 1,000 times 10. What's the fees, bro?
So that's 10,000.
$10,000 just in transaction fees.
That's a lot. That's money that could be compounding for you, bro.
That money could have been sitting in quality shares for 7 years, growing exponentially. I think when people set out to think, oh, I can day trade, I can do short-term trading, they don't factor in the amount of brokerage they'll end up paying. Now, with short-term trading, add in things like the time it takes to do short-term trading. You want to be watching the market all the time, the charts, the short-term volatility, which is what the short-term trader is looking for. It goes up, I want to sell. It goes down, I might want to buy. Day trading, and we know day traders, is a full-time job. You're there when the market opens at 10. Before that even, setting up your orders, and you're there until market closes 4, and past that, if you know.
It's not only full-time, it's a high-stress job. You
High
can't
stress
leave
job.
your desk.
That's right. Now add in other factors like fear, greed, the psychology of trading.
Yeah.
When others are buying, should you sell? When others are selling, should you sell as well? Like all those kinds of things.
It gets amplified when you're doing short-term.
Yes.
And we're long-term. I called you saying, hey, bro, I'm not comfortable. And you said, just hang in there.
Just hang in
We've
there.
been
We
doing this for a
bounce
long
off
time.
each other.
Exactly.
I had a time where I bought some shares recently,
Mm.
and they grew really quickly. And I called Fahd, and I was like,
I'm going to
Fahd, I know we bought this for long term,
Yeah.
but should I sell? It's growing too quickly.
Nah, just hang in there.
Hang in there.
Hang
Long
in
term.
there.
The
Long
same
term.
reasons why we bought the company is why it's going to grow.
In the next 10 years.
Even if it has a correction now, doesn't matter.
You just buy more.
Also, some of the most successful short-term traders we know, in our experience, they're successful because they win more than they lose. Now that's by maybe they win 52% of the time and they lose 48% of the time. The time you lost may have been a big amount. So your net loss, you might actually be negative for the year.
Man.
Now go back and take out fees, take out taxes. It's a no-brainer for us why we don't short-term trade.
It's too risky.
At Tabarruk, we work smart. We make our money work hard by compounding.
That's true.
Now let's look at the third reason why we beat short-term trading and index funds. That's because we learn from
history. The history of the market tells us that there's almost a zero chance that you will lose money in the long run.
the ASX 200 index, which you're looking at now, is also called the XJO. This is basically the weighted average price of the top 200 companies in Australia. It's what everyone refers to when they say the market is up, down, sideways, doing well, or crashed.
Exactly. And these companies need to keep performing or they're going to drop out of it because it always reallocates itself.
ASX reviews which companies make up the top 200.
Exactly. And on the chart for the ASX 200, you can see the rise over the last 30 years. Now, you're going to notice there are some dips, there are some corrections, but you'll also see there's some crashes. But one constant theme is the market has not stopped growing. Let's look at some of the corrections, also crashes in the last 30 years. Now, in 1994, the index dropped 16% from 2300 to 1900. Let's go forward to 2008, the global financial crisis that everyone talks about. The market dropped 46%, bro. Did you know that?
Yeah, well, people generally say 50%, but yeah.
But yeah, when you average it out. So that was from around 6,000 to 3,500.
Bro, the GFC is one of the biggest crashes where people tell me I will never invest in the share market again because I got burnt.
And they're the ones who don't make the benefits because they're too... But
Don't
I can't
realize
fault them. But it's the
sure.
trauma. It's the trauma.
Yeah.
The people associated with
They got
field.
sucked into the short term.
Yeah.
And they invested, crashed, and they're like, we're out, we burned.
But that's why we're here. We want to educate people.
Fast forward to today. COVID, global virus crash, coronavirus crash, whatever you want to call it.
We dropped 30%, almost 30%, bro. And that's from all-time highs of 7,000 to 5,000. And there were fears that it was going to go down. But what's the pattern here?
The pattern is every crash was followed by a recovery. And you can see that every recovery was higher than the previous recovery.
Yes.
And you can see the clear patterns in the higher highs and the higher lows. Markets always growing.
And corrects itself.
We encourage everyone to read the articles in the description below. We talk about the market crashes, what you should learn from history, the reasons why we beat short-term traders, and also look at examples and scenarios where someone invests for the long term and lets their money compound versus someone who invests in an index fund.
And you'll be surprised with the money, the vast difference between the two.
Reach out to us if you have questions, if you have comments, if you disagree. We want to hear from you. Until next time. We look forward to sharing more content in our next video. Links to our website and articles are down below.
Subscribe, like, and share. Come join us and grow your wealth in a halal and ethical manner by rewiring your mind.